Jessica, has anything changed remarkably since Friday and the Powell speech when we did see, the sell-off really start to gain ground?
Yeah, great question. Essentially, the market faced a triple threat last week from a technical perspective. It was the 78.6 retracement line, the 200-day moving average, and the cloud model. So lots of really negative impacts going into Fed Powell's speech that we needed to overcome. And we did immediately come down. And just thinking about the data overall and what he was looking at, I was really happy that there was an instance of a hawkish move. And that's something we've been saying for a while, because if you dive into the data and you see what's really been leading inflation, or at least one portion of it, it really is something that's coming back, such as the energy sector, which I know we're going to talk about in a few.
Yeah. And, it does feel like there's this bifurcation between the institutional investor and the retail investor. The short positioning we talked about in the S&P is an indication from the institutional side. However, if you look at retail purchases of inverse ETFs, that has fallen off a little bit. What does that tell you about where the market's at?
Yeah, and I think it's interesting that you point out the difference between institutional and retail, because if you actually look at the data over time, retail has started to dominate the market. So we have to pay a little more attention to that than we used to. So it's certainly interesting that you see that. And especially with inverse ETFs, actually a lot of brokerage firms don't even allow trades in some of those, or you require extra account features in even to do that. So to see a spike in that is certainly interesting, and you have to be cognizant of who can trade that and what portion actually takes up retail. I love that question.
We've certainly been talking more recently about meme stocks. Today, though, with our first guest, Vahan, he was talking about trimming his energy holdings in favor of some tech. And the charts are kind of showing you something similar. A lot of bearish sentiment at the moment for tech and bullish for energy. Is that right?
That's correct. Yes. So, and we're pulling call to put ratio. So that gives us an insight of bullish or bearish lenience in addition to the chart. So it's a really great indicator. From a tech perspective, it was hugely bearish. I was really surprised this morning just to see that huge move. It's a 2.5 to 1. So meaning for one bullish position, there's 2.5 bearish positions. So that's seemingly bearish. And that's important even from a technical perspective, because doing a huge study of past bear markets, the lagging sector tends to lead the rally. So that's tech in this case, and then also the decline. So that's something we pay attention to. And then the inverse is true with energy, and we see a similar story, but to the upside rather than downside.
Yeah, a great look at two industries, segments that have certainly led markets this year to the upside and downside. Jessica, thank you so much.
Shepard Smith here. Thanks for watching CNBC on YouTube.